Okay, let's move on. Accrued revenues. So we had accumulated expenses, and now we have a category of accumulated revenues. So really this section of the adjusting entries you already have, for the most part, the knowledge in it. So in Chapter 2, we talked about accounts receivable, remember? Accounts receivable and notes receivable all falls under this category. Basically, it represents the revenue that the company already earned, but they have not yet received cash, and that's all it is. So when it reaches the end of the month, we want to represent, for example, some of the contracts. Like if a company hired SmartTouch to perform e-learning services starting from May 15th, and let's say that on a monthly basis they agreed to pay SmartTouch company $800. So this is a monthly contract amount. So from May 15th all the way to the end of May, there has been 2 weeks already. So if SmartTouch company has been providing e-learning services for 2 weeks, even though the regular pay date probably is June 15th next month, so exactly a month later, they should be getting this $800. But by the end of this month, if we want to do monthly statement, we want to represent the work that the company has already provided to clients. Okay, so this is essentially what it means for this journal. We want to represent that we've been providing learning services for 2 weeks already. Even though we haven't collected cash from customer, we want to represent accounts receivable and service revenue that we readily earned. Okay, so remember revenue recognition principle? Company always record the journal entries, even though revenue is not yet collected by cash. If the service is provided to a certain degree, if the goods are delivered, then we capture the service revenue. Capture the part even though it's only partial. Okay, so by the end of the month, for monthly statement, we represent 2 weeks of work that we have already, which is worth $400. Okay, so make sure for adjusting entries you have a good idea of when exactly was the beginning point of the contract and when are we trying to do the monthly statement. And what is the time lapse between it. So if the contract was signed in the beginning of May, then it will be fully $800. If it was signed in the beginning of May and the payment will be made June 1st, then this will completely be $800. Okay, but since the contract is from May 15th all the way to the end of May, there has only been 2 weeks. Right? So each and every week worth $200 of work, altogether 2 weeks worth $400. Right, so in terms of T accounts, again, we have an accounts receivable account that links to the debit side, service revenue that represents the credit side. So you will see that this dollar amount above represents all the other entries altogether. So we're trying to update this part here. So adding $400 of service revenue. Okay, so again, accrued revenues represents accumulated revenue that corporation readily earned even though they haven't received cash. Okay, accrued expenses represents accumulated expenses that company has already incurred but they haven't paid off the money.